Hi, everyone. Welcome to today's interview. I'm Matt, and I'm joined by Mason, a top mortgage loan originator at SafeTrust Mortgage. We're going to explore the latest on mortgage interest rates, exciting new products, and expert advice to help you navigate the home buying process. Let's dive in right now.
There's no need to complicate things. Let's stick to the basics.
All right, so we're going to start first with interest rates. Current market interview. So, how would you describe the current mortgage rate environment?
Right now, the interest rates have stayed pretty stable over the past month or so. This year, there's projected 2 interest rate cuts. It was projected 4, but with the job market actually stronger than initially anticipated, it went down from 4 projected rate cuts to 2 projected rate cuts.
What factors are influencing interest rates right now?
Right now, I like to take a look at the job market, the job report data, inflation. The Federal Reserve has 8 meetings this year scheduled on the calendar. Those are huge indications on what's going to happen with the interest rates. I do think most of 2025 will stay pretty steady with a couple drops in the middle. So it's nice to, especially if you're refinancing, keep an eye on those rates and capitalize when they take a little bit of a dip.
All right, rate lock insights. So, when's the best time for a borrower to lock in a rate?
The best time to lock in a rate, in my opinion, is I would try to close as fast as possible when you do get under contract for a home. Because the shorter time you lock in an interest rate for, you actually get a better interest rate. For example, we close interest rates on an average of 11 business days. If we lock in an interest rate for 30 days, it's actually going to give you a higher interest rate than locking it in for 15 days. So it's important to close as fast as possible.
What are the pros and cons of floating versus locking in an interest rate?
I always say if you're happy with the rate and the payment, lock it in because that makes sure the bank is holding that interest rate for you. And even if you close 15 days from now and the interest rate increases by 2%, you're still locked in at that interest rate. On the flip side, if the interest rates start to go down a little bit, you are also locked into that interest rate. We have an advantage if you work with a mortgage broker compared to a bank. We can actually pivot and send your loan to a different partner if the rates drop significantly enough where you would save a decent amount of money, where a bank doesn't have that option and you are stuck with that interest rate, even if they improve a full percent.
Next is forecast and trends. Do you see interest rates going up or down in the near future?
I do think they're going to stay pretty consistent throughout all of 2025. With the job market, with where it's at and where inflation is, there are projected 2 rate cuts. There was supposed to be projected 4 rate cuts, but I do think they'll stay pretty steady. If you're looking to buy a home as a home buyer, I wouldn't try to time the interest rate. I don't think they're going to sway one way or another where it's going to change your opinion. If you're refinancing, it's important to stay in contact with your loan officer because there is going to be small parts of the year that rates are slightly better and it might be a good time for you to refinance.
All right, so new mortgage products and programs, latest loan offerings. Are there any new loan products or programs you're excited about?
So the biggest hit last year was probably the conventional 0% down. There is something new and exciting coming out this year. I don't have all the details yet, but it should be pretty similar. For first time home buyers, there's always some sort of credit that we can give. Even if you don't fall into one of these buckets, there's usually a credit we can give at closing or a free appraisal at closing for all first time home buyers. So it's important to know what options you have when looking for a home. When I bought my first home, I actually wasn't a loan officer and I didn't know all the products they had to offer. So it's good to get in front of it because you might be losing out on money if you don't reach out to someone about what options you have.
How do these new products differ from traditional mortgages?
The 0% down FHA and conventional are basically like the standard FHA and the standard conventional. A lot of these are forgivable for grants. You do have to pay back if you decide to refinance or sell your property. So it's good to know the ins and outs of these products. But these ones in particular are basically the same as a normal conventional or FHA. We do have no income investment properties. So if you don't currently show income or just started a new job and want to buy an investment property, we do have options for those.
Are there any new loan products that you're excited about?
So the one I'm most excited about is the zero income verification for a primary house. So you can actually buy a home without showing any income. So this is good if you're self-employed and don't show as much income, or you just started a new business. This is a great product because if you have a good credit score and it does usually require a larger down payment. Other than that, the guidelines are very simple and qualification is pretty seamless.
What are some assistant programs available for first-time homebuyers?
First-time home buyers is the best type of home buyer to be. There's always some sort of benefit for a first-time home buyer. We have an FHA 0% down. Last year, we had a very popular 0% down for conventional. That got a lot of people into homes with very little money down. Other than that, we always have something for a first-time home buyer, whether it's a credit to the interest rate or crediting an appraisal. When you're a first-time home buyer, there is something you should qualify for. And there's just so many options out there. So make sure to touch base with the loan officer and see what options that you have.
How can potential buyers find out if they qualify?
So for us, it's pretty simple. And most mortgage brokers or lenders are the same way. You usually fill out a free application to start. It
Mhm.
takes 10 to 15 minutes. We'll ask for some additional documents. And then after we have that info, we'll shop around and see what you qualify for, depending on your income, your credit, your location, where you're moving to, what your goals are. There's usually something for everybody, but you just start off with the loan application and then we'll do the heavy lifting from there.
How is the technology changing the mortgage application process?
So the biggest change in technology in the mortgage industry is the speed. So still today, there are a lot of local banks and mortgage companies that take on average 30 to 45 days to close. I actually think that's the country average. But there are a lot of brokers out there and a lot of companies out there that specialize in residential mortgages. And like for us, the average time from getting the contract to clear to close is around 11 to 12 business days, which is a third faster than the industry average. Refinances are typically a little quicker than purchases, but one of my favorite things is our virtual closings. It's not eligible for all companies in all locations, but virtual closing is pretty cool because even if you're on vacation, you can just sign, refinance your home from the luxury of your computer or phone. So it makes it very seamless these days. But virtual closing is probably my favorite new enhancement in the mortgage industry.
Do you offer digital tools or apps that make it easier for clients?
We have one set database where we do the communication with all our clients. So the same place where you fill out your application is where everything is going to funnel through. So you don't have to worry about different logins in different areas. There's just one place and you can access it from your phone. You can access it on your computer. Chrome works the best. You just pull up Chrome, type in the website, and you can do everything from your phone, whether it's view your loan estimate, or upload documents to check out the appraisal. You can do it all from one app, which is kind of nice.
Credit score and qualifications. So, how important is a credit score and what should borrowers do if theirs is less than ideal?
So every type of mortgage typically has a minimum credit score. Yes, there are some mortgage types out there that you don't need a score to qualify, but those are less than ideal. Like they're just not the best quality mortgages. For us, I always tell people every 20 points on average for a conventional loan will help your terms. So whether your score sits 20, sits 40, all the way up to 720, 740, every 20 points on a conventional loan, you actually will get better terms for your mortgage, depending on your down payment and equity of the home. FHA is a little more lenient. Typically, FHA credit scores will go all the way down to 580. Even some cases, maybe as low as 500. But it is very important. You can qualify with basically any credit score, depending on what's on your credit report. But for you to get the best terms, you're going to want a higher credit score.
What steps can someone take to improve their mortgage eligibility?
So the first step I would do is actually reach out to a mortgage loan officer. Obviously, a real estate agent has some good info too, but I would actually start the pre-approval process. You have to be careful because some companies will do a hard credit pull to start. It does have minimal impact, but it's just good for you to know ahead of time. We always start with the soft pull. So if you're like, hey, Mason, we're interested in a mortgage, but we don't want to pull a hard credit score, we don't want our score to be affected, don't worry about it. We can start off with the soft credit pull, run all the numbers, and kind of let you know what you qualify for. If your credit or income or debt is less than ideal, we can let you know at that time. I always tell people if they know they want to buy a house within the next year, that's the perfect time to get pre-approved. You don't want to wait to 1, 2 months before you want to buy a house because there could be something stopping you from purchasing a home that you don't even know about.
So next is refinancing. When should homeowners consider refinancing?
So everyone always looks at their current mortgage and say someone has a 7% and they can now refinance for a 6.5%. Depending on the size of the home, it might be more worth it. The higher your loan amount is, the more you'll save for that 0.5%. So if you have a $700,000 mortgage, that 0.5% could save you hundreds a month and it could make sense. If you have a $100,000 mortgage, that 0.5% might only save you a few dollars a month and it might not actually made sense to refinance. So, also something to keep an eye on is mortgage insurance. When you purchase a home and it's less than 20% down, you pay something that's called mortgage insurance. It protects the lender that lends you the mortgage. If you end up refinancing, even if the rate is minimally better, but you can lower your mortgage insurance or remove it all in general, that could also help you from refinancing.
Are there specific situations where refinancing makes more sense?
Obviously, the simple one is rates when the rates are lower, and like we just talked about, when mortgage insurance drops, that's a big one too, because you might only save $50 from the rate a month, but you're saving $200 in mortgage insurance. So I think $250 a month is awesome. It's almost a car payment in some situations. So it's all about saving money. Good thing to know. Yes, there is closing costs involved when you refinance. You can always loop those into the loan amount, so nothing comes out of your pocket and at the same time, sometimes you can even get a credit depending how good the interest rate is to cover some of your closing costs. And my favorite part, which a lot of people forget, when you purchase a home, say you close your home in January, you skip February's payment and your first payment is actually in March. Same thing for a refinance. So say you refinance in January, you skip February's payment and then your first payment after refinance is in March. So you do save a little bit from skipping that month payment after closing.
Mm, good to know. Closing process and timeline. What does the typical timeline look like from application to closing?
The process usually takes between 35 days for the country average, right?
Mhm.
Like I said, some companies close quicker. Our average is 11, 12 business days, some longer than that. Some local banks that don't specialize in mortgages could take up to 60 days to close on the home. Obviously, no one is the same. Every one situation is different. Every property is different. So there's a lot of factors that go into this. The process is pretty simple, though. Once you get the loan application, we start working on the loan estimate. You have your purchase contract in, and we get the ball rolling from there. And typically, like I said, as long as everything goes smooth, we're usually ready for closing within 3 weeks.
Do you have any tips for speeding up the closing process?
So it depends on who you work with. Obviously, some lenders are faster than others, but there is a lot of responsibility that falls on the home buyer. The
Mhm.
faster that you can get your documentation in, the faster that your loan will be ready for closing. Like you'll be requested for homeowners insurance and income documents and bank statements. The faster you get that in, the faster you're going to be able to close.
Okay, perfect. And expert advice. What is the single most important piece of advice you give to new home buyers?
It's never too early to see what you qualify for. Even if you just want to plan for 2 years, 3 years in the future, it's really good to start the process as early as possible because then when the time comes, you're fully prepared with your budgeting, your down payment, how much income you need to make, all of the above, you're 100% prepared. So it's never too early to see what you're approved for.
For someone on the fence about buying, what would you recommend?
I would go a little bit backwards in this case. What monthly payments are you comfortable with? And what houses in that area come up with that monthly payment? That's your taxes, your insurance, your principal, your interest for the mortgage. I mean, if that payment sounds reasonable and it's something that you can afford, I think it's always the better option. If rent versus buy is the big debate, right? Like
Well,
100% of your rent, you get nothing back. When you buy something, you're putting money into the home, you're gaining equity, gaining appreciation. And if you can afford that payment comfortably, that's always the best decision.
any final tips for securing the best possible terms on mortgages?
Yeah, the earlier you get pre-approved, the better you'll be able to set up your credit, your bank statements, your income. Just make sure you're set up for success because depending on your credit score and your income, you will get better mortgage terms. So yes, it's important to obviously shop around for your mortgage and find the best mortgage possible. But at the same time, it's just make sure you're set up, like get pre-approved, see what's available in your area, and just be prepared so when the time comes, you're ready.
Is there anything else that you'd like to share?
Yeah, I mean, if anyone ever has any questions, I've been in mortgages for over 10 years now. My personal line is my business line. If you have any questions, you can reach out to Matt, reach out to myself. I'd love to help. I've been working with clients that came to me a couple of years ago and they still haven't found a house and they're still just looking around and it's not the best time for them, but who knows? It could be the best time for you. So,
All right. Well, thank you. That's a wrap. Thank you, Mason, for sharing your valuable insights. If you have any questions or want to connect with Mason, check out the links in the description below. Don't forget to like, subscribe, and hit the notification bell for more real estate and mortgage tips. Thanks for watching and see you next time.
thanks for
Bye.
having me, Matt. See you guys.